Happy Sunday, everybody. Artful Engineer here. Today we're going to look at what happened over the last week and possibly what we can see this upcoming week and into the following week for major Forex and futures that we've analyzed over the past few videos. We'll jump right in here to the Euro USD. This is the monthly time frame still. Again, in our previous videos we've been talking about this double top here that is the ultimate goal for the euro, except I do still believe that this is a distribution to come lower before we head back up and take that. On a monthly time frame, again, this is a long time. So, if we would probably still have 1, 2, 3 candles to close down and maybe then up for the rest of the year. This might be an end of the year target. I don't know. It also could just be that the dollar's going to completely slump and now we're just going to pump through. Right? This is a monthly time frame and it's a pretty macro look here. For those that watched or were paying attention to the NFP release last week, that was rather uneventful. I mean, the last 3 NFPs I believe that I've paid attention to have all been pretty lackluster in terms of market price action. I mean, certainly there's been movement, but not like movement from NFPs that I've seen in the past. So this upcoming week, though, we are looking at a few major releases. And for USD, pound, euro, the major news look like it's going to be CPI, right? And that can follow along with an NFP to really bring about a reversal. Essentially, we also have the Fed chair nomination, PPI, the pounds or England's, Great Britain's GDP. There is the Euro bank holiday for the French and German, and finally core retail on Friday for the USD. So there's some decent news in here that could be pushing price around this week and provide for nice manipulation legs. On the monthly time frame, what we're still, I'm going to show some drawings here in a second. What we're still seeing is this monthly gap down, right? This was the end of February, so the Iran war had started over that weekend. And so we gapped down and then made a nice push to the downside, really wicked down and came back. Now we've seen some bullish retracement, and the question here is, on a monthly basis, are we going to be pushing through and keep going? Are we going to push through and reject? Or are we already going to maybe tap some of this gap and then reject? So those are kind of the 3 scenarios we could see on a monthly time frame as we're a week in here. So I'll zoom in. On a weekly basis, this is what we have, and now I will show my drawings here. So this red box is the monthly gap down that we had from the end of February to the beginning of March on the monthly. So this is how it appears on the weekly. Our current weekly dealing range is from the high of this wick to the low of this candle. That is our weekly dealing range. And we have now retraced all the way up, tapped 618 fib 1 time through that gap. We've wicked into a gap, wicked into it, and now we've actually closed the body about halfway into the gap, or a little bit below halfway. So we can zoom a bit further in here to the daily. One thing to note, we have not, so this was the end of February, this was the beginning of March. March pushed down, and April mostly pushed back up. We have yet to close a body above that gap down from February to March. This is where it gets interesting. This, on a daily time frame, looks like an accumulation, and it possibly is. However, it's also possible that we are finishing like an M-style pattern, right? We wick, we'll wick up again, and possibly dump. That's kind of what I'm hoping to see kind of during a CPI. If we had NFP Friday, so that might be a push up. We have Monday, Tuesday CPI to wick some liquidity, and dropped. So that's one thing that I'll be looking for, is a potential to have a, Monday, Tuesday CPI, Wednesday, Thursday, Friday, kind of do something like this on a daily basis, where Mondays and Tuesdays going to manipulate with CPI, maybe take this top. I would not particularly like to see a daily body close above this monthly gap. Is it possible? Sure, there's a daily gap here, right? And we have kind of this low resistance liquidity could end up being taken, right? So I did close out my Euro short futures positions on Friday. Just there seems to me to be too much risk that it goes up more before it comes down. My bias here is still to the bearish side for Euro, bullish dollar. I think we might see that if there's still no resolution in the Middle East. And the charts in general don't look particularly like there's going to be a deal. There may be a deal, in which case the risk on appetite may yet again increase, and we see something more like this, where we just continue to take off on CPI, and we just get a little move like that, and we, dollar continues to drop, and whoops, I'm gonna delete that, and the euro and pound would continue to increase against the dollar. So on a daily time frame, we could see something like that. What is going on? I took that off. Okay. Oh no, I don't want to do that. Be editing that. Okay, if we zoom into a 4-hour, so when we looked at this last week, we were right here. We had closed on this candle down here, and we interestingly gapped up, came all the way back down, retested this low, and broke to the upside, but wicked back. And over Thursday and Friday, we still had some relatively nice bullish action, and again, this kind of looks like a nice cup that could just continue to pop this top, which I've been hoping holds for a while. But again, this 4-hour repricing candle that has no wick on it is a likely target to get price delivery, at least to touch that top of that candle, which is still in this monthly gap. And it's possible that we just keep going and take this high, and then I'll be looking for a displacement to the downside. If we just don't get it, then my short bias on euro and the whole idea of the Middle East conflict causing some folks to take shelter in the dollar for the maybe what I would think is the last time that would happen in a long time, where people would shelter in the dollar. So we'll see, but that's where I am now. I don't see that the euro is performing particularly bearishly as I had hoped. That said, when we look at this weekly dealing range, right, we have just tapped the 618 one time. It's likely to do it again and take this liquidity and dump. So before we looked at this, I was hoping this might hold a bit stronger and we could take a run down, but it looks like we're accumulating. We're going to run this high. We're going to run these equal highs, and we're going to run this kind of slow drop off that hasn't really been touched here. So that's at the 75% of the stealing range. And what I'm now seeing, after we failed to kind of continue to take some lows here, is that euro is going to use at least this CPI week to make a run up at least to 75, probably pop it. This is nice equal highs here that can just get spiked through and run down and reject, right? If we see that and we can't get a body close on a 4-hour daily time frame above the 0.75, then we'll be looking for more bearish opportunity. But for now, we're basically in the middle of this range, 50%, and we're now closed back above it. So this monthly gap, I'm hoping still holds the monthly down, and we'll be looking at how we respond to the 618 and the 75 levels here as the week unfolds on Euro. So there's certainly this possibility where I will draw it again. On a 4-hour time frame, we might just dip down here and Monday, Tuesday come up to 75, have some resistance, pop through, and then what I want to see is something like this, where it's going to be break here, but the body will close back below that 75 mark and then continue down. That's what I'd like to see. But we may certainly just take it from here and pop this top as well. So that's on the euro. The pound also actually looks fairly bullish. As we noted last week, the pound being more bullish than euro. So we could actually, I mean, these tops will most definitely be cleared, likely with this and this as well. If we did take a 4 standard deviation look to the north side from this consolidation here, this looks like it eventually would want to get taken on the sell side, but not until this stealing range is taken, it now appears. So what we could see on the pound, depending on how far it wants to take some early week liquidity, it may or may not even do that. It may just pop straight up. So I would be looking to see something like this, and then we're going to take this during CPI perhaps. If we did go up to 4 standards, right, that's up here, and then I'd want to see it hit 4 before I start seeing a reversal. What we also could see is just start to run up and clear it to 4, and then we start to break down maybe. So those are kind of the scenarios that I'd be looking for on the pound. If we are to zoom out here to a daily time frame, right, that would clear a major buy side liquidity pool, and also take some of these similar structured highs like this on the year that I pointed out on the euro chart, but this is on the pound daily chart. So once we're above this high, we still have some nice relative equal highs all the way up here too. So this, you know, may be that the target that's the pound is gonna take it, the euro won't yet, or maybe they both run it. Again, these are the things I'm looking at here. Both currencies have certainly given a more bullish tone over the past week and a half than I was expecting, and now we're looking at possible runs of buy side, and the dollar just continuing downwards. With the dollar, yes, this was, if we go back to a monthly time frame, this gap here was again the February to March gap that we see. And this is a weekly imbalance on a lower time frame, I believe. Or yeah, weekly gap down over here. So I was expecting this to hold, and so far it has, but we haven't actually tapped the 618. So in my prior analyses on a weekly time frame, I don't think we had looked at the dollar coming back and tapping into this gap, and even this is almost a repricing candle. There is a small wick, but again, the 75% of this range hasn't even been touched. So it's very possible that for the dollar on the weekly, we will see a drop to sweep the bodies of these candles. Yes, there are wicks here, but to sweep the bodies would mean to actually take a lot of high volume liquidity, because if the bodies are where the volume resides, just sending a wick down there and then coming back up would make a lot of sense on a narrative to tap an extreme discount in this weekly range of the dollar to give some pricing activity within this gap. I mean, yes, it has gone up, down, and back up. So that's why a wick would make sense. Not we've had body closures over the gap, so a wick down and maybe a recovery would make sense. Or maybe we body close back up, or maybe we just keep going. But for now, we're close to the middle of the range, and I'm not going to be trying to trade euro or pound to the north side necessarily, since my bias is actually bearish overall, and I don't like to trade against my bias, but sometimes I certainly find myself doing so, as I'm sure we all do, thinking, oh, well, if I expect it to go down to go up, then why don't I just short it now? Well, that's where I've gotten myself into plenty of trouble, and do I still do it? Yeah, I do. And sometimes I'm right, and more often I'm wrong. And I regret that I've done that. So I'll make other videos on that at some point as well. But yeah, you can see we've hovered around 50. It looked like we were supporting, but now we've broken below the 50. There's no real gap here. There was a gap up. We've now just consolidated and broken down, closing through the 50% of this range, and it's likely that we're going to tap into the 618 and this daily/weekly gap over here on the dollar, which would mean euro and pound are going up. So depending on how it looks, say, on the 4-hour time frame and where we get some imbalances, yeah, I might actually start looking to long euro in this regard, or long the pound also in this regard. So these are some of the things I'm looking at this week. It certainly, again, is more bullish than I was expecting or that I wanted to see, but again, on a macro time frame, right, a month is a long time for this candle to close, and it can certainly still do a lot in the time frame that we're looking at. We could wick up and back down. The Wyckoff if it is a distribution on a monthly time frame here, it's certainly not over, and if it's an accumulation, we probably would still wick up and then come back and retest the range before we leave on a Wyckoff accumulation here on a monthly basis. Okay, so we've also looked at gold in the past couple weeks. So here on this past week, we had a down and then 4 up days, but not with our high on Thursday and a nice close in the premium of this dealing range and also the premium of this dealing range. While we still are, the drawings are going to come up here as soon as I make this. Okay, so here's our overarching dealing range. We have not been able to close above the 50 since these couple candles. Over here, we've broken this low with a gap to the downside, and now we've returned to a premium of this dealing range here. So this dealing range is from this high to this double bottom, right, which is technically in a discount of this dealing range. So for gold, I think we can be looking at a couple scenarios where we would come up to test some of these higher premium levels within this dealing range, so the 75 here, and we could see gold come up and then take a dive, which is where I would have liked to see it happen last week. But again, with the euro and the pound and the dollar doing what they did, I would like to see gold do something more like this over the week, where we have a Monday, Tuesday CPI, and then a continued flush to the downside one more time. I would like to buy more gold when it gets down to this level before then we start seeing something like that. It feels like this is too early based on where we are in this dealing range, that we have not returned to a discount yet to actually get some propulsion to the upside. That said, the other thing we could see is a push down to take some into this imbalance here and into this down close candle, which would then pump us to get something more like this into 75% before we possibly come back down to test this or just continue up. That's probably going to depend a lot on what other commodities, oil, and the Middle East conflict are doing here. But ultimately, I would love to have a better opportunity to buy some more gold down in the 4,000, 4,100 to 4,500 area than to see it just rip right off. Silver on the same token is forming a nice double top here, which will most certainly be cleared out at some point. The question is it going to do it where we're coming down to tap it and then do this? Or are we going to kind of take a deeper dump and then possibly wick these bodies and then take it up? Overall, you can tell I'm bullish silver. The question is, are we just going to keep running it up, or are we going to take some of this downside, which I was hoping we were going to start doing. But again, with the analysis on the dollar and euro pound risk assets still seem to be on, and silver and gold aren't necessarily risk assets, but they're certainly following more of the risk assets at this stage of the game. So that correlation has been holding for a couple months now almost, where it's been harder to transport silver and gold, say, through heavy transport centers that reside in the Middle East, UAE, for example, or Saudi Arabia. I've heard where they have gold storage that they're not really able to move. So that's kind of held price down and consolidation for a while. So ultimately, yeah, we could be looking at a quick pump dump over this week to get silver manipulated during CPI, and finally then be able to see a more of an upside move. Again, possible it just rips, and that this was the boat to catch and we missed it. You know, if we look at copper too, though, copper is sitting in a big premium, so I would expect and hope that we can get something coming down here. There's a repricing candle here, pretty much a big gap here, so we're in a pretty premium market. The question is, are we just going to go and take this high now? If the metals follow some kind of correlation, you know, we could see something like this for copper. Well, I'd love to see this for copper, where we can get a slice below this low, possibly into this gap, test the top of this range before the real explosion. Dang it. Before the real explosion, but that may be a pipe dream, and I'm wishfully thinking that we get a nice opportunity back in the low fives to catch some copper. We could probably just come down here because this ended up breaking structure just barely. So I'd like to see a break, a tap, the point number 3 of the high, and then a double bottom in here, like I've pointed out. So this would be the Stoic SBS break, tap, double bottom, up. And the question is where that double bottom would form. Would it form? It should form maybe in this area, right where that repricing candle is. So this would make more sense if we came down and then up. This is probably a pipe dream, and if we do end up breaking and closing below this low, we could be looking at, you know, longer term bearishness on copper for a bit. We do have this massive gap that was filled in, so we could see back to half of that gap being filled in, which is kind of right where those arrows land. But we already did see a dig into the top quadrant of that. If we do mark it out, we have this as our gap in copper. Okay, I need to get off this continuous drawing. Okay, sorry. So we gapped to here. Alright, so we do have a center line here. And we are, if we grade this range, this gap, we did not close below the 25% of this gap, and we haven't even touched the 50. We gapped up and continued from the 50 during this price run. So we did test it. We broke, tap, maybe we'll get a double bottom somewhere in here. So I'd be looking for some kind of sweep of internal liquidity in an imbalance here, right? We have an imbalance right here with almost a repricing candle. Below that, no real imbalance on the daily. So if we did take a dip down here, halfway through the gap, that would be a good entry. I'd be looking for longs. But again, copper could do what gold and silver want to do and just continue pumping. I don't see that as necessarily particularly probable if there is no peace deal, and that doesn't look probable. But again, it's the market. Anything can happen, and lately news headlines have really been driving these things lately. When we looked at soybean oil last week, I said more longs than shorts probably, and that's pretty much, we had a run up and a run back down. I was long soybean oil actually for a little bit on Thursday here at the turnaround, and that was about it. That's all I could do on soybean oil, but I do think we're still headed for this top over here on the daily, and it's a matter of how deep into this imbalance we're going to dig before we probably make that last run up. Soybeans looked a lot more bullish last week, so once we had this run down here to take this low and into this imbalance, we saw a nice rejection to the bullish side. We have relative equal highs here. I don't necessarily see soybeans, I don't see them necessarily dropping to here to then take those highs. Possible, sure, but we've got now all these highs in here that are relatively equal and kind of ready to tap into this gap and imbalance that was made 2 years ago. So that's the analysis on soybeans. I do think we're going to continue to see that rise. That's one of the reasons I'm seeing that the charts are telling us that there was nice news of potential peace deal last week, and that can be the perfect catalyst to see something like the NQ just rip, right? On a monthly basis here, this is a ridiculous 2 months. If you're long, that's been awesome. I liquidated most of my holdings in February here, like around January, February. I figured I would risk this little last 10% or so push that I might see, versus if it just wanted to tank right off. But again, I was wary that this might do a nice fat run up that I see if we take a 1 standard deviation of this range and leg down. If we were to go up a measured move to 1 standard, that puts us at 29,639. And again, like last week, I said I feel like we will, on a monthly basis, wick, and drop. And that's what I'm waiting for. So I'm not longing this. I've tried a few shorts already, but I don't think we're quite to target. Maybe CPI is that last push to manipulate some people into buying at these relatively, in my opinion, ridiculous prices. But you know, stock markets are designed to go up, so I can't be a perma bear forever. I can't be a perma bear. I am generally bullish stocks, but certainly not now. And I would love to get a discount all the way back down below this low in the 16,000s. So while I obviously do not hope for anything catastrophic, I just don't think world events right now are meriting this valuation in a risk asset at this time. And again, whether it's the dollar is going to be a temporary safe haven or whether it's going to turn into gold or who knows, Bitcoin, I don't think so. We'll look at Bitcoin in a second, right? But ES certainly has had a bit more muted run up than the NQ. But again, if we were to take that range and measure one standard up, we could get up to 77.40. What I do often find though is that if it's gonna fail, we might only get up to 1.5, which is basically where we are right now. So it just when we have a leg down that breaks and then we retest that with an up thrust, then we might only get to the approximately 1.5 of this range, and we're right there. We're a little beyond it, and with a fairly strong close Friday, I could see us hitting the 1 mark where the NQ is actually a lot closer to that 1 mark than the ES. So there's certainly room, I do believe, for this to have a run up early next week with CPI. And what I'd love to see, this is what I'm preparing for, is the run to that standard. And then we start breaking down where we have the retest, and then, whoops, not hide drawings, continue drawing, where we then have this start to form, where once this low gets taken, then I think we're bearish for a good bit of time. This is monthly, of course, but on a daily basis, this is going to look maybe a lot different. So on a daily basis, I would like to see maybe, yeah, we could definitely be pushing on a daily basis up to this week on CPI, and then we start to trail off. The YM still hasn't cut through this high and actually looks like it's more ready to reject, which is what I wanted to see. I did not want to see a start to close above this high. I'd love to see a divergence here where the Dow will make a lower high than both the S&P and NASDAQ. So that would lend to the bearish case. If the Dow really can't push through, or if it wicks through and comes down, and the other two hit the 1 standard and start to peter out, then I would really like to see this start taking a tumble so that we can get some good shorts in here and a nice discount in 8 to 10 months when we're back down in this zone or even lower. That would be a great buying opportunity. So for all the doom and gloom that was spouted, 3, 4, 5 months ago, now that the headlines aren't spewing the doom and gloom, that's usually when it's saying, oh, these were great earnings, the news is fine, the economy is resilient, look at the stocks, buy, buy, buy. Usually the time you don't want to be buying. And so I'm certainly not buying up there, and I'm waiting for a turnaround to take some shorts. I am already short I'm long some SPY puts. So those are the put options contracts on the S&P for the middle of June. And we'll see. There's obviously limited risk when I paid for that premium. And what I would like to see is on the SPY. Let's see, I bought some at 700 and some at 680. So in the middle of June, I would like to see this top out and come down. It doesn't even have to get all the way down there. It just needs to get closer for those to start appreciating as it drops. So it's a bit of insurance, but it's also an options play on a potential downswing here as things might pick up more in the Middle East. Oil, crude oil. So as we mentioned last week, there is, I will have to zoom out. There's this double top and this double top, and it forms a even longer term double top. And if things are to escalate or re-escalate, then I expect those to just get blown out. So again, on a macro basis, we have not been able to close below 75% of this dealing range that we've had. If we expand that dealing range to here, which would be this high to this low, right? We have literally tapped it on this wick, right? We tapped it on this wick, got a little bit higher on higher low, and then an even higher low at the 618. So signs here to me are pointing that we're not really trying to get lower on oil yet. It's just they're doing a good job of making it look like we're gonna be bearish and possibly get back down here to sweep here, and then go higher. But if the rest of the market macros play out, oil probably has made a low in here where, you know, we've broken, we tapped, we took a lot bigger run here, or if we say we broke, tap, and now we've double bottomed, we could be in for the next run on oil. Finally, the Bitcoin. Bitcoin on a daily basis. We're still bullish for a bit, I do think. We haven't yet hit the 618 of this down leg. So the liquidity was taken and we dumped. So this is the dealing range that we have. We are back in a premium above the 50. So right, this nice little double top probably enticed a lot of people in. I have a short video on that one. If you were to look for a short briefly, which I did, I took it up here at this at the 75% of this range. You can see that in the short, or sorry, this range, and you can see that in the short. So I took it short from here to the bottom of this, where that top of that candle is, and the imbalance started. So that was my Bitcoin short. And I can show that if you want in my Leap paper trading account. So I joined the TradingView Leap for crypto. I shorted it basically the top here, and I exited right there. I do see us running back up a bit to the 618 of the parent dealing range here. And once we have done that, we're going to be looking for a double top in this imbalance right here, with a potential run up to the 75. This is a close to a repricing candle. My bias, which is contrary to many on social media, is short Bitcoin. That said, we still need to get up to a 618 probably of the entire weekly or monthly range here. So this dealing range from the all-time high to this low that was created, right? The 618 is up here. We are, I'm sorry, that is the wrong, this dealing range. So from this low, this double bottom here, up to the all-time high. We are back above a premium there, but I'd love to see us get to a premium in this leg, possibly even this leg, right? So the 50% where we haven't really, we've gotten nice body closes, a wick through and a body close below to dump. I don't necessarily want to see us take this out, but it's possible that we get back to the 75, which is the 618 of this whole range. So Bitcoin could certainly be bullish all the way up until about here, where these start to align, where this imbalance, this 618, this up close, and even this up close at the 75 start to break down. So for now, Bitcoin is still bullish. I'd be looking to do some shorts in this area, the 87, 88,000, as mentioned last week, from the 83 to 88,000. Whoops. We could be seeing some Bitcoin short opportunities in this area where we might consolidate and try to wick down. But for now, we're kind of getting into the middle of the middle, and I expect it to run up a bit before I would like to see some displacement to continue this down and take out this, at least this 40, this double bottom here into this imbalance. I'd love to see that tapped with the 25% mark of the overarching dealing range here. But the market, again, is the market, and we could take a run up, take a run down, and take this high, and then do something like this. That could be on the Bitcoin radar. Or what I would prefer to see is this first leg up, maybe just to here, and then we start to break down instead, and we do something like that. So I think these are the two scenarios I have in mind. If we start getting nice bullish closures above this gap and we keep going and we don't reject at this liquidity, then we're obviously going for all-time highs. That would be fairly clear, and that this was the liquidity sweep here after this break, tap, double bottom, and we're going up. But I still see this as an original consolidation with a 4 standard measured move to exactly this mark, which I think I pointed out in a previous video. But if we want a more detailed analysis of that, I can certainly provide that again. And then if we break down one, we have a second stage of distribution to knock out all these longs here before possibly back up. That's my case for Bitcoin. I don't see us running the highs yet, but again, it could happen. So we'll be keeping an eye on that. But I do think for the short term here, a couple weeks, we're going to be bullish until we might see a drop at this 618 and 75 of these two dealing ranges. And if we wanted to get aggressive and look at this dealing range and pop this top and dump here, maybe we do that. Maybe we get up here, wick through that, and then come back for the 25. Either one of those could be possible. So we got to look at lower time frames to see how that might play out as we get closer to that. But for now, I do think Bitcoin continues its march higher to at least this imbalance and possibly the 75, maybe even higher. So that will do it for this week, and I will see if I can get a video out as the market develops, pre and post CPI, maybe a couple shorts, and we'll see where we take it from there. All right, thanks for tuning in.